Welcome back, everyone, to Be the Trader. Today, I have a very special guest, Phil Goedeker. Phil is also known as OzarkTrades if you've been following for some time. So, Phil, welcome to the show, my man. I'm really excited to have you here, man.
Thank you. Happy to be here.
Absolutely. I first discovered you before we get into your background on a little speech you did, I think at an Investors Underground or Trader Summit.
Sure.
And I watched that thing probably like 30 times. It's stupid. Yeah, and like
Right.
back to back because you hit on some points which I want to get onto later. But if you could give some people some background for those who may have not seen your video 30 times, who you are and what got you into trading.
So I've been trading now for about 15 years, and I started trading in college. And back then there was no Twitter, there were no chat rooms that I was aware of. It was just me studying on my own, 100% self-taught, and I only knew to go long stocks. That was it. I didn't know shorting existed, so it took about 2 years in college trading part-time of taking small losses to finally my senior year I realized, oh, I can bet stocks go down. And I had seen I was really studying, all these stocks that go up. What makes a stock go from 5 to 50 or 2 to 20 or whatever? And I couldn't figure out how to buy them ahead of time. But I had learned that for the most part, all these that go up come right back down, especially if they're small cap garbage companies. So once I learned that shorting was possible, that's when I immediately started to short, immediately had success, and then it just took off from there. So I've been trading for about now full time, 14 years, something like that, and it just kind of grew and snowballed, ever since then.
Nice, man. And so to get straight from there to this video that I've seen a ton, and a lot of people probably haven't. If they haven't, I'll put that in the show notes to make sure they can go watch that. But
Sure.
what really went home is you even mentioned that when you were trading through your journey, you found success, but you were like you would win, and it was very stressful. You would win, take a lot of
Right.
losses, and so forth.
Right.
And then you talked about how you kind of just figured out if you just stuck to your top A plus setups that you started to
Yes.
really see success. So are
Yes.
you still that kind of mindset at trader or are things have changed?
Oh, absolutely. No, I'm still really 100% that mindset. It took probably my first 4 to 5 years of trading successfully, and I made the same amount of money every year. And it was a good amount of money. There was no reason to be upset with it. But I thought, okay, what can I do to get to the next level? What can I do to, make the next step up? And I thought, well, I could either increase my position size on my winning trades, and that's something I did, and it worked. But then I really, it took me 4 years to really, at the end of the year, study my tax return or my gain loss, gains keep, whatever you want to call it, of all your trades together. And it was eye opening for me to see that I had all these winning trades, whatever they were, 40,000, 50,000, 60,000, 70,000, but I had daily 10, 20, $30,000 losses. I thought, why am I trading all this junk, all this
Yeah.
crap that I know the odds of me winning are just 50-50, right? And finally, in year 5 or so, I thought, heck, why don't I try to slowly cut all these trades out, and trade less? If I have to trade less, that's fine. I mean, trade less. And that next year, I think my profit loss about doubled. I mean, it went up dramatically. And I thought, wow, why did it take me 5 years to learn that? But it did. And then it kind of snowballed from there to try to perfect your strategy of, okay, this is what I'm good at. Let me try to get as good as I can at this, trading this. Anything else, if I do trade it, it's tiny size. So instead of shorting 50,000 shares, whatever, or, maybe I'll short 1,000 shares, or I'm not very good at going long. So if I want to try to do that, I'll do it very tiny size. So if I'm going to lose money, it's very small. And then obviously increasing your position size was the other side of that to increase your.
Absolutely. And so I'm very curious on when you started transitioning to that kind of a trader,
Yes.
how difficult was it for you to see those mediocre trades and not take them, right? And to only stick to what
It
you're good
is.
at.
Could be it was very tough because trading's addicting, right? And if you're going to sit in your computer from Central Time 8:30 to 3, you think, okay, you need to be in a trade at all times, if not multiple trades. And It took a kind of transitioning your brain to say, okay, just because I'm a day trader doesn't mean I have to trade number one every minute or every hour. I might not even have to trade every day. I mean, it took some time to learn that the big money is in the big setups, right? And lately we've seen a lot of them. I'm looking at GNUS symbol. Stock went from 20 cents up to $10 in a few weeks, and now it's crashed. It's back to 3. But for me, that is an A+ setup. Why not focus more on those, even if they're a couple a month, right? I mean, you only need to hit theoretically a few a year to make really good money. And I think a lot of traders fall into the trap of, I need to trade multiple stocks every day, all day, and I think that is where you can get into a lot of trouble.
Why do you think they do that? I mean, why do you think it's that mindset? A lot of people do that. I mean, I just curious, why do you feel that way happens?
I think it's an addiction. I think people are addicted to the markets. I'm addicted to the markets. You love it. I mean, when you really like something, it's tough to not do that. And when day trading is so, we've seen the last few months during the virus pandemic that all these brokerages are opening up 300,000 accounts per month. Why? Because you can open an account and at the click of your finger, you can buy or sell thousands, if not tens of thousands of dollars and try to make money. It's so easy. So when you sit in front of your computer, it's so easy to think, oh, that's set up. I could make $1,000. Maybe it's a coin flip. Let me try. Well, guess what? I lost, and I think it's the addiction. I think it's that it's so easy to trade. And I think that's why the average trader, that's one reason why the average trader loses money, because they're not, laser focused on what they're good at. I really preached, I think it was even in that talk, or maybe it's different, but analyzing your trades. That's why it's so important to sit down and analyze your trades, because every trader is different. And some traders, I'm awful at going long. I mean, if you tell me to buy a stock, I'm going to lose money. I mean, I just can't do it. I mean, I'm horrible, so I rarely do it. Other traders, they're great at buying stocks. They're great at buying breakouts, or, buy and hold, or great at buying into catalyst, whatever it is. So it's so important to study your trades. I think figure out what you're good at and try to perfect that. I have a lot of friends even in St. Louis that say, hey, I want to learn to trade. Can you teach me or this or that? And I say, well, I can tell you what I do, but just because it works for me doesn't mean it's going to work for you. That's the great thing about the market, is that there's infinite ways to make money. There's infinite. And the hard part is finding the method that works for you. The method that works for me, it might not work for you. I mean, if I were to sit down with Warren Buffett and tell him my method, he would laugh at me and say, you're an idiot. Why would you do that? Where his method is buy and hold and never, ever sell. Well, I can't, I don't have the patience to do that. So every method's different. And I think the hard part for a young trader is finding your niche and then sticking with that and then trying to perfect that, not trying to perfect all these different strategies at once, because it's just too difficult. I think it really is. It's too hard.
So when it comes to finding your niche, let's say you're a trader, you're finding your niche and you stick with that one niche. The problem is, you already kind of alluded to, like, it could happen, depending on what niche it is, it could happen maybe once a week, maybe 3 times that week. If the market's on fire, maybe every day, and then all of a sudden a week of dryness.
Right.
That's the difficult part, right? That's the difficult part. And the other part is, like, how do you, so as traders, especially new traders, especially at the beginning when I wasn't consistently profitable, I was always worried about, and even to this day, I mean, I just started seeing my own success. So, like, whenever you still kind of judge, it's still hard, but you still sometimes feel like if you're only trading so often, and let's say you trade, one setup, right? And you're like one setup, and it's like maybe you trade it once this week, you nailed it. And then it shows up twice the next week, you lose on both. And sometimes it's just the odds. It just didn't work. And then the next week, nothing happens. So, and all you're feeling is this dreariness, like, oh my God, I just came from 2 losses, I'm waiting. What, any suggestions for people who are trying to stick to one, but it doesn't happen as often as every day, like all the time?
But let's be honest. So most day traders, even me, even if I don't have a setup, I'm never going to go. I don't think I've ever gone a day without trading in years. But what I do is if my setups aren't there, and there's nothing to short, and I'll say, okay, crap, I got to buy something long today. That's all. Everything's going up. Let me buy some Amazon or Apple. Okay. If I'm buying Apple, I might buy 500 shares. My suggestion would be take your position sizing down dramatically. Expect to lose, but take your position sizing down dramatically. So it's more of a learning experience, right? Mm-hmm. So, you might win, you might lose. It's a 50-50 trade, but you're not losing money. I mean, that's the biggest thing in the market is don't lose your money. Don't lose your capital. Once you do that, well, you're burnt. So my suggestion is, keep learning, keep studying new strategies, but, take your position sizing down 1/10 and just don't expect to, make that much money on them, during the learning phase. And now, all these brokerages are having free commissions. So it's not costing anything. The commissions aren't costing anything. So that's the nice thing. But again, it's a mental game. It's so hard. I mean, trading is so mental that I think once you learn the strategies, I think, you have them and they're with you forever. But it's up here, I think, that really determines your success or your failure at the end of the year. And that's the hard part is your mind, right? I mean, your head's tricking you because it's telling you, hey, I don't want to make $100 today. $100 isn't going to pay my bills. I want to make 1,000. And, there might be one day a week or something you could make 1,000 or whatever. But the other days, hey, it's a learning curve. Let me try to make 100 or 200 or whatever it is, because that is where you need to be to learn and try to get to the next step.
Yeah. And when you talked about your niche earlier, how did you get to your own niche? Like, how did you get to the point where you were like, this is my setup? Were you just losing a lot, or were you always consistent, or what was there?
No. So when I first started trading in college, my sophomore year, I had a couple $1,000, and I was long only. I didn't know shorting existed. So I would long breakouts, long, probably the same dog crap companies I'm shorting today, just long anything trying to make money. And I had very little success. I mean, I would win. Oh, when I would win, it was a time to celebrate. I would win like 1 out of 10 times and lose the other 9 out of 10 times. But I studied charts. I studied and studied and studied and studied. So I knew these patterns, but I couldn't pinpoint how to buy these breakouts. I couldn't pinpoint a GNUS. I couldn't find that stock at 2 and say it's going to go to 10. But by the time I figured out that shorting was possible, I had seen enough of these dog crap companies that had gone from 2 to 10 that said, hey, these are going to come right back down. So I had studied enough charts over 2.5 years that once I literally shorted my first stock and it worked, I thought, well, hell, I'm going to do it again. Did it again next week. Did it again the next week after that. And it was immediate. It was like a flipping on a light switch. I went from losing, I'm going to say 9 out of 10 times to making money 9 out of 10 times. And, but again, during those first 2 years, I studied chart after chart after chart after chart. I mean, tens of thousands of setups, and I got them ingrained into my head. So when the time was ready, I was ready to nail them.
So really, what you're saying is, I mean, you were basically just looking all the time at charts. So then eventually you got to a point where things just started at that subconscious level. I'm guessing it just kind of felt like, oh, I know this setup.
Yeah.
And then from there you start, finding some success on your shorting. So speaking of when you got your niche and then you started focusing more on that and wanted to improve it, you went from focusing on that niche to eliminating more of the other filth trades and then to improving that setup.
Yes.
When it comes to improving that setup and focus on it, let's just say you're a week and there's no real A plus, right? And then that next day comes, you get your GNUS.
Right.
And you're like, heck yeah, this is my setup. How do you go about attacking that? As in, do you think more of, I'm willing to take a couple of shots at this, or is it more of like, if my setup's either going to work right away or it's not, and I'm done? Like, how do you go about that? Because there's one thing, I'm a short seller too, right? And an overextended stock, like we'll see them, and maybe it's still green, right?
Right.
And And sometimes it's good to short depending on how high it is and what it looks like. Did it have an exhaustion candle? Did it have a death candle? Did it have, whatever it may be?
Yes.
How do you think about it when it comes to this is my setup? And just walk us through your process of like, what are you thinking about attacking?
Well, now, and a GNUS is pretty rare. That stock got so extended up to $11. So when that happened, I was excited. I mean, literally, my heart is racing because I know something like that only happens, a few times a year. It's certainly not once a week or once a month.
True.
But last few months, we've been having a few of them. So, you know, really what it has is I get excited, get my borrows, and then it's putting on some, I guess you'd call them feeler trades to try to determine when the top is in. I'm not a trader that likes to short and then add higher and then add higher and then add higher. I've always kind of preached that. I like to get in a starter size, whether it's, a fifth of a position, whatever you're comfortable with. And then I like to be in the money. I like to wait until I think, okay, this is peaked, or like you said, an exhaustion candle, it's falling on heavy volume. Okay, let me start. A few minutes later, it's down a little bit more. Okay, let me add. I have gotten in trouble in the past. Dries is a great example from, I'm going to say 5 years ago when it went from 15 up to 100. And literally, it's one of the only times I've gotten stubborn. I know Dries is a piece of what, and I'm going to short and I'm going to add. I'm going to add. Well, guess what? A day later, I added at 30. A day later, it's 50. And a day later, it's 100. And I'm like, oh, my God. So now, Dries taught me a lesson where I want to see downside. I want to see the stock fail. I want to have the trade work. I want the trade to be on my side when I'm adding. Now, again, GNUS, when it broke pretty damn hard and pretty fast. For most others, I like to short, like a failed bounce. Stock immediately starts to go down. I take a starter, bounces a little bit, then it starts to fail. Bam, hit it again. It starts to fail more. Bam, hit it again, and kind of go from there. But I've preached a lot in the past. I take a lot of paper cut losses. I have no problem putting on a starter of 5,000-10,000 shares and losing 20, 30 cents and then reattacking it.
And that's for your A+ setups. You're okay with that?
Absolutely. Oh yeah, absolutely. Yeah. And that's the thing, GNUS, it was an A+ setup at 4, 5, 6. But again,
yes, good
if
point.
you have the mentality, well, I'm going to add higher and add higher and add higher. Well, we've seen JFIN yesterday went from 4 to 30. I mean, in one day. So as a short seller, if you're selling, shorting low, well, GNUS wasn't really a lower float. I mean, you see how high it went. So you just have to be careful with the timing. And the timing it's the hardest thing. I mean, it's the hardest thing for a short seller is figuring out the timing, nailing the timing, and trying to perfect it. And a lot of traders ask me, well, how do you time it? And I have no crystal ball. I'm wrong all the time. The reason I have success and the reason I make money is that when I'm wrong, I'm smaller size, and when I'm right, I'm I have larger size, and I like to hold some of these big overextended stocks probably longer than others. Something like GNUS. If it goes down $1 or $2, some traders might say, "Oh my God, I made $1 or $2. Let me get out before it goes up." Whereas me, I think, okay, the top is in. I have conviction. I'm going to hold for $5, $6, $7. Or Hertz. Hertz went up to $6 or $7 now. I think on the ones today. So it's conviction of knowing. My bigger winners are on swing trades, 2, 3 days, maybe longer, of these real overextended stocks that, okay, once they break, they're going to go down 50, 60, 70%. And that's where, for me, the bigger money comes from.
Interesting. And so a couple of things come to mind when you were talking. Number one is you're comfortable taking all these paper cuts. So I'm curious on how did you get comfortable, because there's other times where traders, they'll take paper cuts, right? But that still messes up their mental, like in some way where it's just like, this is my A+ setup, wrong, wrong, wrong. Oh, here's the back end, but now I'm a little hesitant to go full size because I just took all of these paper cuts. Like, how did you get through that?
Well, it's tough, but again, I got through it when Dries and I lost $1 million. So it's like, okay, what would you rather do? Take paper cuts or lose 50 grand, 100 grand, 200 grand? I've seen these stocks JFIN yesterday is a great example.
Yep.
I shorted it at, and I'm not from my computer, so don't quote me the numbers, but I shorted on the opening push of around 14 or 15. I recovered 11 or 12, and then I reshorted 14 or something like that. Then as soon as it broke out,
Yep.
I got out. I said, hey, this isn't right. It's not natural. Somebody's manipulating an algo or something. And then it doubled. It went up to 30. So it's easier for me to say, hey, I'm going to take a paper cut because I've gotten run over before. I've been there, done that. So do you want to get run over, or do you feel better losing $1,000, couple $1,000, whatever that is? It's just much easier.
And so what about when you also mentioned borrows, like you'll borrow your shares, and I never thought about asking this before, but because you brought up borrows, it made me think about when these setups are setting up, like you were saying, GNUS. I know guys would keep quoting that stock. It doesn't matter the ticker, like any ticker.
Right.
Sometimes there's a ticker that is up from 1 to 4 one day, and then the next day it's to 6, and the next day it's to 7, and it's at 6. It's like, oh my God, I'm good. This is a good setup. But then maybe the next day it's at 8, the next day it's at 10. Are you borrowing? Like, I'm just curious in your thought process. Like, do you borrow even though you may not be using it that day? You know what I'm saying? Or
Unfortunately, yes. And that's
Okay.
a tough thing. That's a big issue with short selling. And that's a big issue when I tell people, hey, do you want to learn my method? Hey, just so you know, you're going to pay all these borrow fees, whether you trade it or not. And unfortunately, that's a cost of doing business. And my cost of borrowing is probably a lot more than others because, JFIN yesterday, I go back to that symbol. A lot of traders didn't have it. Why? They didn't want to pay the early fee. They didn't want to borrow it. I did. And at the end of the day, it paid huge. So I'm more of the mentality of get me to borrow. And the hope is that I use it, but sometimes you have unused borrows and it's a cost of the business, unfortunately. Now, that being said, I don't just borrow every gapper I see. I really don't. I look at the float. That's the biggest thing I do is look at the float. What's the float? Something like GNUS, the float's 25 million or 30, whatever it was. I'm not that worried because I'm going to get shares of that. If there's a float of 1 million, 2 million, 3 million, and pre-market it's up 100, 200%, whatever it is, okay, I better grab a few because this one's going to be hard to borrow.
Yeah.
I always make sure I try to have something, but it comes into play of how much the stock is up and the float overall.
What have you found as a sweet spot? Because that got me curious. Because I never thought like that in terms of if the float, if the float is 30 million, there should be shares essentially later, whenever it's ready.
Right.
Is there like a certain number, like to give people an idea? Like if it's 5 million or lower, you probably should if you're interested, you might want to borrow.
Yeah, no, there's not. There's no set thing. It kind of comes from experience. It comes from, again, how much the stock is gapping. If something is up, and what kind of market we're in, it's about potential. Where do I think, like JFI, and I never thought in the world it would go up 1,000% in a day or whatever it was.
Oh my God, that was so crazy. No, it went over 1,000. Yeah.
Yeah, over 1,000. So then it was a godsend that I borrowed. I had 20,000 shares of it borrowed. It just, depends on your stomach, how much you want to stomach and pay in borrow fees. I'm going to pay a few thousand a day sometimes way more than that. But I can stomach that knowing that in the end, it's going to reward me. But again, you can get just a few hundred shares. You don't have to go huge. If you feel comfortable borrowing 500 shares, well, then grab them.
Yep.
Even 500 shares on JFIN, you could have made easily $10 a share at the end of the day. So, it just comes from experience, really.
Yeah, I understand. And so when it comes to, well, we're going to kind of shift gears here. I'm kind of curious on at the beginning you said when you started trading, there was no Twitter, there was no social media, it was just you, right?
Right.
It was just you and yourself learning how to trade.
Right.
Do you, now that there's social media involved and there's Twitter, all this, you're on there, and so how do you see, did that ever, whenever you started getting into Twitter or whatever it is, did that start to affect you in any way? And if it did, when did you notice and what did you do? And if it didn't affect you, that's great too. I'm just curious.
No, it honestly didn't affect me. By the time I realized Twitter, it was more of a social platform. Hey, these guys are on there they're funny, they're cracking jokes, they're making money. Let me join them. And I mean, there was nothing I really took that serious. I don't really use it as a tool. Some people post fast news, but I do think now for beginning traders, Twitter is important. I mean, I think it can help you with your learning curve just by following, the right traders that what might tweet, trade ideas or news or setups or even trade reviews, or maybe some people tell me if I post charts with entries and exits, that helps them.
Yep.
So I do think, there's a use for Twitter in, early learning traders that are learning, but I don't use it a ton, to be honest.
I understand. No problem. And so I'm just curious on what is one thing, if you could go back in time, right? And you could be like, hey, Phil, you're in college. I'm from the future. Here's what I would tell you to get to where you are now
Sure.
much faster.
Yeah.
Whether it's break a bad habit or whatever it was, what would you tell yourself?
To get there faster, I don't know. I went through a long and enduring process of studying it all on my own. No shortcuts, no help, nothing. And today I'm very grateful for that, because I studied and studied and studied and studied and studied. I had nothing out there. Today I would say, yeah, I would follow some traders on Twitter. I would join a chat room that you like. I would join a chat room that's legitimate. With good moderator, and that has the same strategy that you have, right? I mean, that's the first part, is finding your strategy. Find maybe a chat room or a group of traders that trade your strategy, and then bounce ideas and strategies off of each other. And I think that can help the learning curve, because I get asked all the time, I've been trading a few weeks, what can I do? I said, I don't know. It took me a few years. Yeah. I have no idea. It's going to take time. So, I don't know of anything that's going to help you with the learning curve that quickly. But I would say, if I could go back, I would definitely, enjoy Twitter and a chat room. But it's finding the right one, because there's a lot of shady ones out there right now that want you to buy garbage, and try to make 10 cents. Yep. And that's just, I don't see that as a strategy at all. I mean, that's not a strategy. And the thing is that it's never a strategy to follow your moderator in a trade. I mean, that's not a strategy. I mean, when I say join a chat room, I mean, maybe, okay, join one where you can learn from others, and you can, not so much follow their ideas, but follow their methodology. Okay, this is why you're doing this. And that way you can hopefully do it on your own.
Yep, absolutely. I agree with that. And if anything, if there's, let's just say by chance, when it comes to risk,
mm-hmm.
How do you, especially on these plays where you're swinging these things, right? Like if it's an A+ setup, and you made a good example, because some of these A+ setups, they will come all the way back down. And not only that, but a lot of us, me included, like we'll short and we'll take $1, $2, right? Like, and we're like, yes. And then we see, but we always see like the next day it's down $2 more, $3. So are you thinking I'm shorting big picture and I'm just holding because the top is in, that's my main risk? Or are you thinking more of, okay.
That's it. Yeah, you said it. The top is in, that's my risk. So something I've done, and I've gotten lazy in the last couple of years, but something I've done since I started trading was print out charts of the biggest winners of that year. And maybe just 10 or 15 of them, not hundreds, but print out all the GNUSs and the IMRN and ABIO and JFIN, all these junk stocks, Hertz, print them all out, print out 2 copies, one of the upside and then one of the backside. And you do that for a few years and you've got a couple hundred, and you will see that a lot of these patterns repeat themselves, where they go up and they go up, they get parabolic. And once you have that exhaustion candle or exhaustion day or big down day, whatever you want to call it, I mean, for the most part that I've ever seen, that signals the top. And that kind of gives me the conviction now to say, okay, I'm comfortable doing that. I'm comfortable holding that overnight.
So before we wrap this up, there's one thing that kind of came to mind, and that is when it comes to it was, you mentioned something about whenever you're printing out all these charts and you're tracking them. Is there something where when it comes to those big patterns, right? The big picture, and you're printing those out. Are you ever? Did you ever fall into the idea? Maybe you do trade this way, maybe not. But are you ever focusing on? Oh, there's a trend here. The trend hasn't broken, but the top looks in, but the trend's still intact. Like, are you using trend lines, these whole bull flags, stuff like that? Like, or do you mainly just how do you see things?
Well, I use flags kind of just in my head, but no, I use price and volume are the only
Okay,
indicators I use. That's it. That's
cool.
it. I don't use any other squiggly oscillators or any of these other indicators. You can go on some of these charting softwares and they have like hundreds of indicators, and I've never used them. I use price and volume, and again, volume is huge for me because on a lot of times when you see a big break, it's on big downside volume, and that's a huge indicator for me. Is a big downside volume, and that's really the only indicator I use. That's it.
Nice, nice. Well, Phil, look, man, I appreciate you being here, man. I never would have thought we'd be connected, so I really appreciate you being here. If anything, if there's anyone who wants to connect with you or at least find you, can you let them know how they can do that and where that can be where you can be found?
Yeah, my new Twitter is just my name, Phil Goedeker, Phil Goedeker one, I think. My OzarkTrades got hacked,
Oh,
so Twitter would not let me back on as OzarkTrades. But I'm under Phil Goedeker one on Twitter, so you can follow me, shoot me questions. I usually respond within a day or so, so that's absolutely fine. I've enjoyed the interview, Alex. I appreciate you having me on. I would do it anytime. It's a good time.
I appreciate my man.